Gopani. Let's take the conversation forward with him. He's ready. Jinesh, good morning. Thank you for joining us. Jinesh, I guess the point which I'm trying to bring out for our viewers is that this market is getting very, very polarized or very, very sector or stock specific. If you bought into pharma, it's a terrible market. If you bought into banks, it's an okay market. You bought into IT, this is like a great bull market. Why is that?
See, I think Nikunj, what we are seeing, there is some kind of sectoral rotations happening depending on the way the global world is moving and the how the economy would shape up. In last 1.5 year, if you see of COVID, there was a significant fall and then there was a significant climb of the market and there was a reflationary trade which was coming into play. Also from the earnings point of view, from a low of maybe last March or April, the numbers have been pretty strong when the COVID moved away. And again, when COVID 2.0 came, numbers again were bit lower than the expectation. And now the expectation is that things will be back to normal. But this time the climb would be normal because the economy was not stalled after COVID 2.0. And hence, I think wherever there is a surety of growth for at least next 2 to 3 years, I think money is moving that side. To your point, why it is happening, I think clearly there are still ifs and buts in the economy, whether we will have third wave. Also, global is pretty volatile. You would have seen what happening in China. So I think there is lots happening, and hence wherever there is surety of growth, surety of cash flows, I think money is again moving that.
Jinesh, global markets have been firm like a rock. With each passing day, S&P is making a new high. Nifty is also sitting at an all-time high, and the small and the mid-cap stocks have seen a sizable correction. Do you worry about when the reversal will happen, which is that when there is a global correction or if benchmark indices they start correcting, it could have a much more bigger sell-off and impact on the small and the mid-cap space?
See, normally that is part and parcel of the market, that whenever there is a high beta or a high momentum trade, the small cap and mid caps tends to outperform the large caps. And whenever there is a sell-off, the mid caps and the small cap, obviously that is the cast and creed that they end up selling more because of various issues. So I think, in fact, I was presently surprised that despite such a big rout happening in China and Hong Kong market, our markets have been able to hold on, which hopefully shows the maturity of the investors and the maturity of the market. If you really see, Hong Kong is down 4-5% YTD, and we are almost up 14 odd percent. So that's the outperformance what we have shown to the emerging market investors, given our ability to bring back economy to pre-COVID levels, given our ability to manage the COVID 2.0 much better than COVID 1.0. I think barring a significant black swan events, which will rattle the whole world, I think we will have volatile times, but doesn't look like a big crash, I would say.
One side is this great growth which has come back in IT. Other side are wage inflations which will hit them in coming quarters. Do you think in the near term IT stocks are fairly priced, richly priced? How are they priced?
Yeah, I think it all depends on how they are able to demonstrate their ability to outsmart the consensus estimate. As of now, the way the commentaries are coming, clearly it looks like that there is going to be a good 2 year double-digit growth range. And it might be between 12% to 15% or 12% to 18%, depending on the size of the company. But what we are seeing is the adoption of technology, the adoption of plans to get into technology from the end customer has gone through the roof. and it doesn't look like a one time or a 1 quarter or a 2 quarter kind of an event. It looks to be a bit of structural, at least for now. We'll have to see how things go. But if you really see global numbers of Globant or Accenture also, you will really see it is not only India specific, but it is globally these technology players are benefiting from this COVID crisis. So I think so long the TCVs continue to hold up well, so long there is a good momentum in the businesses. I think technology hopefully should do well. And also, we should not forget that these are very high cash flow throwing companies. They do buybacks, they do dividends, and hence the growth plus improvement in ROE is pretty important for re-rating, which is happening in this sector.
Sure. Jinesh, hi, morning. Wanted to understand how is it that you're bifurcating within the private banking space or actually banking at large in particular, given that ICICI Bank, SBI have clearly been showing leadership, but now HDFC Bank seems to be playing catch up as well. Now that that big overhang and credit card issuances ban got lifted by the RBI. But what happens next within banks? Because, along with IT, all eyes now on banks to try and chip in and, buck the bulls forward from here.
Correct. So I think it will all depend on how the third wave comes and goes. If let's say there is no third wave, then I think the momentum will pick up over next 1 or 2 quarter in terms of disbursement, and which will help in terms of loan book growth and also help in terms of reducing the asset quality issues. However, if there is a third wave, and when it's anyone's guess, then I think financials will take some time, some more time. However, the top 4 or 5 banks, and which I have been telling earlier also, they have been able to manage this crisis pretty well. So it is just that as of now, people are a bit worried. People will wait for 1 or 2 quarters to understand if there is a third wave or no. And if we don't have a lethal third wave, then I think financial at some point of time will start showing growth, and again will come back to land.
Sure. Okay. Where else do you see material scope for investment or value on the table still, Jinesh?
I think it depends on stock specific. As Nikunj said earlier, that there is a good stock specific activities which are taking place, and we as a house also we really believe in bottom up stock picking, and there is scope for finding out new ideas either in the form of IPOs or in the form of turnaround strategies or a general momentum in the sector. So stock specific, I think there is a lot of activity happening across sectors, and our job is to find those 2 or 3 or 4 leaders in the pack in a particular sector and just be with them with 2 to 3 years.
Okay. Hi, Jinesh. This is Mubina as well joining in. You mentioned that the market will now look at those areas where they see certainty of growth going forward. I know you mentioned that it's going to be stock specific, but largely if you're looking at where is there promise and opportunity of growth, the answer should lie in the larger themes. I bet IT is going to be, one of your answers. You briefly alluded to it as well earlier. But where else do you see there being certainty of growth?
See, I think as of now, if you really see technology looks strong, consumption, some as I again it will be stock specific, but looks to be doing again coming back to a normal growth trajectory. In fact, there was nothing wrong in the sector, but it was just that there was a bit of a volatility. So consumption as a theme should do well. The infrastructure capex related stories, or you may call it proxy to infras, either in the form of capital goods or maybe cement and other stuff, also seems to be doing well. So these are some of the sectors I would say broadly which should do well. Export side again, we might argue on valuation, but the specialty chemical uh, uh, piece continues to do well. On the pharma side, again, as I've always been saying, one company is one sector in itself, and hence it depends on company to company how they are performing. But there are again pockets of opportunities across that. So, frankly, I would say stock specific across sectors, there are good opportunity. Large sectors, I am talking. There are good growth opportunities.
You know, it's interesting that the list which you mentioned, they were largely more defensive names. You know, IT, few names in the pharma and healthcare space, consumption as well. I totally agree. It's going to be totally stock specific. You've stayed away from, you know, cyclical stocks like, yeah, like metals, you know, materials, real estate, infrastructure. Do you think that now is, you know, the time, that boom period that we saw in these sectors, or that we are still seeing perhaps, where we saw massive rally in these stocks, is perhaps behind us, and now is not the time to look at these names?
Looks like that way because again we have to keep in mind that again it's a global commodity, so frankly it all depends how the global world moves. But what we are understanding and hearing is now it is hurting the inflation across global world, and hence uh, 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 I would say a further movement in the metal prices might not be good from the economic point of view. Having said that, I mean, again, setting out of Bombay, it is very difficult to take that call because it's a global commodity. If, let's say, nothing happens in the upcoming Jackson Hole meeting and there is sloshing of money all around and there is no tapering, then again, prices might go up. But then what we are seeing, all these companies are operating at 80, 85% or maybe 90% capacity utilization. And now it is only price growth which will determine the future growth in terms of the business momentum and the earnings growth. So I think I don't know, but it looks like that it will pause for some time before we get new capacities in place. And also, we should not forget that because of this chip shortage, the auto sector, if you see globally, are reducing production targets at least for near term. So that should also put some brakes on the end raw materials because as demand is in the sense supply is not there because of the chip shortage, there is going to be a constraint for some of the large consuming sectors like auto to go ahead and buy more of metals and other raw materials. So I think it should consolidate or maybe correct if I'm wrong.
Just looking at the market, and again just one of those days where you are not seeing any large momentum driven pockets. I'm just scanning through the FNO list as well. One of those days where markets are frankly looking for direction. I think for small and mid cap stocks, traders are not really looking at the Jackson Hole event and trying to make up their mind, but there is definitely an element of lack of commitment which clearly seems to be coming in. Jinesh, broadly the idea for banks, I'm going back to the topic and will be soundly slightly repetitive, is that they are a proxy to the growth. But we are going through a phase where a lot of corporates are also returning debt back to the banks, whether it is Reliance or whether it is Tata Steel. A lot of companies are doing that. So what happens to this typical old theory, which is that buy banks which are a proxy to growth? Right now growth is coming back, but the credit growth is not even in double digit.
You are absolutely right, Nikunj. So we'll have to dissect how the growth will come. If you really see top 20 large corporates, you are absolutely right. They are deleveraging their balance sheet. Even below 20, there is lot of capital available, and hence you are seeing a lot of QIPs happening. And also the mid-sized companies are trying to deleverage to best of their ability. So the question comes, where does the growth come from? So either it will be a working capital growth, or you end up going to SMEs and MSMEs. In the SME and MSME space, again, there are bifurcations. There are good people who would not like to take more debt, and there are people where banks might not be willing to do because of the and you would have seen what happened, how much money has been used through ECGLS scheme, which shows the pain in the SME sector. So the leftover is the whole retail piece and including the home loan piece. So I think looks like that the growth will come from again retail, including home loans. And if a bank is positioned good that side, then I think they will have a good momentum of growth. Maybe not now, maybe 1 or 2 quarters down the line.
Appreciate your time. So glad you could join us.